What's going on, y'all? It's Isaiah, and in this video, I'm breaking down my top 10 mistakes that I made as a beginner when I was trading. All right. So, I just want to help people, man, and I want to help simplify it because I know that it was very complex in the beginning. Trading was like it was like Chinese for me or Mandarin, right? It's not Chinese, it's Mandarin, but it was very complex, and that's why it took so long for me to get into the charts, right? But once I got in, I'm like, oh, this makes sense, and so I just wanna make this stuff simple, and I want to be able to look back on my trading journey 5 years from now, and be like, man, I came a long way. So this video, 10 mistakes that I made as a beginner trader. Number one is randomly listening to people on social media that are experts. And it's no shade to anybody, right? But I have listened to a couple people. It could have been on Twitter, or Instagram, cause or X, right? Because X is where like experts go and they're talking about things, but they don't always be right. And so I may get in a play or look at something and then try to day trade it, and I take a L. And I'm like, fuck, man, right? But it's simply because I was just randomly listening to that person. You don't know what somebody else says is gonna happen, right? So if you don't fully trust them and they're not fully vetted, then don't listen to them. Because some people just be putting out content just for likes and engagement and stuff like that. And some people don't really do this. They just are catching on a wave and they want to sound like an expert in that short period of time, right? So randomly listen to people. Number two, just my lack of understanding, not fully understanding the VWAP, not fully understanding the EMAs, not fully understanding what a rejection is, what a gap fill is, not fully understanding like how like to really trade, right? So lack of understanding was a really big mistake that I made, but I had got to a point where I remember like in the middle of my journey, I was like 4 or 5 months in, and I had lost like 3,000 that month, and I took a break for like 3 weeks. I'm like, man, I gotta go study, and I gotta take a chill pill because it's kind of crazy right now. It was annoying me, and so I took a break, came back, and then I just started slower, right? And then I felt better, I had more confidence, and then we started to slowly go up, right? That's the second one. The third one is not rushing, right? Not so rushing my trades and not knowing what a good setup looks like. Like for real. If you don't know what a good setup looks like, then how do you know what to trade? And that comes from rushing, wanting to trade, wanting to get that screenshot of 40%, $100, $300, whatever, right? But because you're rushing, you're never gonna make no money. You're never gonna make no money, right? So you gotta understand, you wanna put the education and the understanding first before just getting into a trade. Even if somebody tells you to get into it, you may not even know how to place the order. And you could fuck yourself. You could sell instead of buy, right? And then when you're in a trade, you could sell at market and instead of limit order. Like there's so many small things, right? So I was rushing in the beginning because I just wanted to get it started and make the money, but I made a lot of mistakes. All right, and not knowing what a good setup looks like, being able to understand the patterns in the charts, right? The next mistake I made was trying to swing trade in my day trading account. Horrible mistake, right? Horrible mistake. I started off with one account and then I graduated to two accounts. So now I got a day trade account and I have a swing account. But my day trade account in the beginning, I would swing it. And then if it's down, let's say I got to play and it's down for 4 days, but it's in my day trade account and I'm trying to day trade, but I'm down 20%, right? And let's say I'm down $400, it's gonna look horrible and it's gonna fuck with my mind because I'm gonna be like, damn, I'm down. But it's a swing trade, and sometimes swing trades they take time to either recover or to really take off, right? It just depends on your entry. So I stopped day trading in my swing account. Once I started doing that, I started making more money. I started being more like better. My execution was a lot better, and I mentally felt better as well, right? So stop swinging in your day trading account. The next mistake I made, I would be greedy when I was up, and then I would be fearful to enter certain trades. That's a horrible combination. You can't be greedy when you up. So if you're up, so here's a rule. If you in a day trade and you're up 8, 10%, it's not wrong with taking profits. Because I always say, this is how I look at trading. If I go to the bank and I got $1,000 and I go to the bank on Monday morning and I say, hey, I have $1,000. I'm going to give this to you. I'm going to come back in 30 minutes. And I want you to give me $1,100. So give me 10% of my return on my money. They can't do it, right? So you have to understand the type of daily returns you can be getting in the stock market with options trading is far greater than what any bank can give you. Once I understood that, I slowed down. So on a day trade, if I'm up 10, 15%, I don't mind taking that. Because those 10%, 8%, even 5% gains, they will keep you profitable over time and you will be able to build your wealth, right? So I stopped being greedy when I was up. And then I started learning how to master my entries. I got so much better with my entries. It's not even funny. In the beginning, when I got in a trade, I would, within a minute, I would be down 8%, 10%. And then, so think about the psychology. You invest your money into something, within seconds, you're down 10%, 8%, right? You're down a couple $100, $100, whatever. Okay, now you're like, fuck, I don't want to lose this money. So then you can either exit or you can stay in and lose more money. And then when you are up, you're so ungrateful because you was down and you want to make more money, or you actually sold those contracts and you're down on the day and you want to make 3x the amount of money. So now you're being greedy. And that's what was happening to me. So stop being greedy when you're up. Take the profits. Even if you're down, let's say 200, and then you get up and you're negative 50. If you don't see it going up, you need to take that. Because I would rather be down $50 than down 300 and have to recover from that. Right? And then learning how to master your entry is critical. Right? So those were mistakes that I made. The next mistake that I made was basing my trades on what I think is going to happen. Fucking horrible, right? Basing my trades on what I think will happen. That's not how you do it. Oh, it's going to recover. I'm going to stay in this. Oh, this going to do this. I'm going to stay in this. No, that's not how this goes. All right. You have to understand the charts. You got to understand market sentiment. You got to understand a lot of things to be able to consistently pull profits out of the market. You have to. And you have to understand that when you win, somebody else lose. And when you lose, somebody else wins. All right. The next thing was a mistake was playing earnings. All right. Playing earnings. Horrible for me. I don't play earnings no more. I don't, even if I know a stock is doing well, I'm not going to buy a contract at market close and then wait for earnings. That's a gamble. Unless you know the CEO or something, you don't know. Wall Street be playing all kind of games. They will crash the stock before earnings just so that they can get in and then go up. Right? Or the stock won't move. You think it's going up and then it drops by 10%. Now you just lost all your contract. Like, no, right? I want to be in a trade when I can control the trade because I don't want to lose all my contract value. So I stopped playing earnings. That made a great difference in my whole thing because one bad earnings play, gamble, could mess everything up. All right. The next mistake I made was over trading and revenge trading. I think that's common knowledge, right? Revenge trading and over trading. If you up, right, let's say $1,000 on a day, and your usual day is maybe $400, so you make more than what you usually make, stop trading. Or if you make 40% on your first trade, stop for the day. Be done before 7 a.m. We don't get into stock options to work the whole day and trade the whole day anyway. So, and if you lose money, stop revenge trading. Don't get into the next trade just out of spite. Like, now I'm going to get my money back. No, you want to understand why you're getting into the trade still. So you got to slow down so you can speed up. You got to slow down so you can perform well. You don't want to just be getting in trades all willy-nilly just because you want to get your money back. That ain't how the game go. All right. The next mistake that I made was my trade sizing and risk management, right? Sometimes I would, there's been a couple times where I oversized on my trade and the trade did not go as I thought, right? Keyword thought. And then what happened? I'm down. And I'm down more because I invested more into that actual trade. And now I'm hoping that the play recovers. So it's like, I had to understand that. So I'm very particular now. When I'm day trading, I'm only day trading. If it's a swing trade, I'll get that joint 8 months out on an expiration date just to be careful, right? But trade sizing and risk management, that's very, very, very critical. Okay. The next lesson and the 10th lesson, which is the last one I learned, is taking trades at market open. Stop taking trades right when the market opens. You see a stock going up, and so you think it's going to keep going up, and you don't want to lose or you don't want to miss out. You get in, what the stock do? That bitch drop down, right? Because it faked you out. That's a bull trap. So I no longer get in trades within the first candle. No, at least wait at least 10 minutes, if not 15, 20. That's just me, because I want to see the trend of the market. Because yes, you can make some money in a couple seconds, but if you know the direction of the market, you may be able to make a little bit more money and not have to make as many trades, right? So it's not about being in chaos. It's about being smooth, right? Being chill and knowing when to snipe it, knowing when to pull that trigger, right? And because you made it this far, I got a bonus one for you. My bonus lesson that I made as a newbie and a beginner trader is not knowing my price targets, which is my exit. If I don't know when I'm going to get out of this trade, why am I trading? That's called gambling as well. If you don't know how to measure your targets and you don't know what pattern you're trading, then you're going to be asked out, right? You're going to be getting out at the wrong times. Oh, I should have made more. Oh, I got out too early. I got out as a loss. Like this is, you got to get very, very, very specific with this and how this goes, right? So you got to know your price targets on a day trade, right? You got to know when to audible, when to mix it up, when to get out early and all that other stuff. So those are some things that I've learned and mistakes that I made as a beginning trader. And I hope that this could save you a lot of heartache, a lot of money being lost. And I hope that it could help you make more money and do better in the market. All right. So that's all I got for this video. Always remember, get out of your head and get into this world, because your head is a dangerous place to live. All right. I'm going to see y'all in the next video. Peace.